And up next, we have Julie Lascar, who's going to tell us all about what she learned about crypto privacy while she spent a decade working at Treasury. So Julie, thanks.
Great, thank you guys. I'm gonna lower this a little bit. So my name's Julie Lascar. I'm now the head of policy at Digital Asset. We are the folks behind the Canton Network. Obviously, we come up a lot these days, so thank you, Peter. I'll mock you for that one. For those of you who don't know, we're a layer one that has configurable privacy. So I'm not gonna spend the whole time talking about Canton. I just wanna explain it because I actually think there's a part of this that really relates to the overall conversation. So we're a layer one and we have privacy at the sub-transaction level. So what that means is that individuals who are a party to the transactions are the one who can see the data. Nobody else can see the data. So not everything is replicated across a public ledger. Things are kind of put on sub-parts of the ledger. There's a reason I'm explaining all of this. But as I continue, I'm gonna take us back in time today. So a little bit about myself. I spent about a decade at the Treasury Department, and I was asked to kind of share a little bit about what I learned during that time around privacy. So post-drift hack, I kind of spent a lot of time thinking about North Korea, like we all did, and are doing on a daily basis, and thinking about what's changed about North Korea over the past decade. So back in the day, and you'll see a little bit of 2009, 2016, but the way North Korea operated is they set up these front companies, usually outside of the United States, and then the front companies were used to open bank accounts in Chinese banks, and using those bank accounts at Chinese banks, they routed money through US banks using the correspondent banking system. And I pulled this from DOJ's indictment of Dandong Hongqing. For years, I butchered all of the names, so I apologize. But the reason I'm bringing this up is because I think it really is a reflection of what is the model that policy and law enforcement and DOJ used to go after this activity. And the model was that regulated financial institutions were either collecting customer identification information at onboarding, or if it was a correspondent banking transaction, there was travel rule information. And this is still in existence. I'm not, this part is not history. These regulations are still in place today. If it was going through a correspondent bank, there was travel rule information. So information on the originator and the beneficiary that was transferred through the originator, the intermediary, and the beneficiary bank. So if law enforcement and policy, if law enforcement's investigating, they would get this information as they do today from a suspicious activity report. OFAC on the sanction side continues to have administrative subpoena authority, and then there's also subpoena authority by DOJ and law enforcement. So this is how people were following what North Korea was doing in the US financial system. So fast forward to 2016, 2017, which really leads us to today, where we saw North Korea's tactics change, and they really discovered crypto, as we all know. But I think you can kind of see the dates. We have our first, I think our biggest, North Korea and crypto was in 2017 with WannaCry. I forgot about this, but it was ransomware where they demanded payment in Bitcoin, which was the trend that we still see today. And then we all know, we got to 2025 with the Bybit hack, we had the drift protocol. But the way that law enforcement started to follow this changed. First, everybody sees things on blockchain analytics. So the first way that you know that a hack happened is usually by X or Twitter, depending on what you choose to call it. And then everybody, not law enforcement, but every blockchain analytics company and investigators start following where the funds are going. And then if something hits a centralized intermediary, you may get outreach from law enforcement saying, can you freeze it? Can you hold it? While we wait for a more formal legal order to come to you. And I wanted to remind us of all of this because I think that as we're talking about privacy and what privacy can look like on chain, it's useful to take a step back and say, for policymakers and regulators and law enforcement, the paradigm has shifted. And a lot of times everybody associates whatever is going on in this ecosystem with it must be on a public blockchain. And we have to kind of remind people that that is not always a given. And we have had different And so I think that's just a challenge that we're going to face in this ecosystem that we wanted to be aware of. So now that we've had our history lesson, I also wanted to kind of take a little bit of a comparison of where we have seen things change from the last administration to this administration as we talk about privacy and anonymity. So I have a couple quotes up here, but back in 2022, and these were all reports that the Treasury Department put out in coordination with like FinCEN and OFAC, and really trying to lay out from a policy perspective what the department thinks about privacy and anonymity in crypto. So in 2022, terms like anonymity-enhancing cryptocurrencies were pretty popular, and we had things like an opaque blockchain, which was pretty much any ledger that is not completely public. Like that's what that's referring to. We had a DeFi risk assessment in 2023 that talked about how blockchain analytics cannot replace the importance of regulated financial institutions and AML-CFT. And then we have these two bottom from this administration. And I want to read this because I think it's a little bit striking as I was going back and looking at it. And it says, some digital asset users may want to preserve their privacy when conducting transactions. From my perspective, I think that's not so forward-leaning. What it's pretty much saying is like, we'll allow it to happen, but we're not so excited about it. I was just saying. And then in 2026, it's talking about mixers again, and it's because of that was like a requirement for a congressional report. But the takeaway here is custodial mixers, when compliant, could provide unique information. It pretty much says, if you're a money transmitter, we know where to find information, so it's okay to use that. And I say these in full transparency. I worked on three out of the four, and I remember the conversations involved, and obviously these go through like checks both from like a building, but also make sure that it aligns with the administration's policy. But looking back on these, the takeaway that I have is, first, I think there's still a reluctance of what privacy looks like on chain. I think that there is still a thought that there's a need for everything to be public. And I think that's just a challenge that we should all recognize. And I'm saying that as somebody who now works for a like configurable privacy blockchain, but I think that it's something that we should just all be aware of, that regulators and policymakers are still gonna have to readjust and reorient to what things look like when not everything is on a public ledger. I think I covered my Canton in the beginning, so I'll continue. But I really wanted to just leave, I know we're very short on time, on a couple of questions that I think like everybody just needs to consider in this room, which is, as we think through what privacy looks like on chain, like what is privacy versus what is anonymity? What are we okay with recognizing that financial institutions are still going to be collecting a significant amount of data, and law enforcement and policymakers will be going to them to receive that data, versus what is anonymity, where nobody is collecting that information? I think those are like questions that we are all still needing to grapple with. The second is, how do we as an ecosystem help policy and law enforcement adjust to on-chain privacy? I think like we think about this from a Canton perspective of, what does blockchain analytics look like on Canton? How can we enable things like Bloomberg to operate on Canton? Because that's something that in traditional capital markets, they're very used to. And with a privacy-enabled blockchain, how can we make sure that like a Bloomberg has access to information so they can be broadcasting it? And then I think it's the vulnerabilities that exist as more assets are on a privacy-enabled blockchain. I think these are things that we continue to have to grapple with. And I think one thing I was struck with today, both from earlier and now, is I think in many ways this room is maybe a little bit far in a different place than I think policy and regulatory folks are, as we saw from like the earlier slide. And I think we have an opportunity, especially throughout this administration, to like help folks readjust and see how far you can kind of push things in a regulated environment to help them reorient to a world in which they recognize that not everything is going to be on a public blockchain forever. If you're going to be making a stablecoin payment, me personally, I'm going to be hesitant to put everything on a public ledger, but we have to kind of work with government folks to help them change how they think about this technology. And the last thing that I'll leave with everybody with is, I think the most interesting thing that's probably going to happen this week to answer some of these questions and give insight into how government is thinking about this currently is when Treasury releases its AML rules on the Genius Act. We just saw they released their large AML program rules. So we would think that the next Genius Act should be coming. And the reason I think those are critical is that's going to be the first time that we have FinCEN and OFAC putting out information on what are the standards for an issuer of a native crypto asset. We've never had that before, and we're going to have it. And I think that it's going to really illuminate what things like, what do they say about blockchain analytics? What do they say about privacy? Where is the start and end of an issuer's obligation? And I think that really feeds into a lot of the conversations we've been having today. So with that, I'll pause. What is time like, Mike? Do we?
We've got 4 minutes.
I'm happy to take 1 or 2 questions if helpful. Yeah. Yeah.
How does privacy work and the permissioning around making private data public in that scenario where a bridge is being used? And who's doing it, the user or the intermediary?
Okay. When things are moving off of Canton, then that configurable privacy no longer continues because then you're going to be using a different blockchain. So on Canton, that privacy exists because it's done at the protocol level. But once you're moving off, you're going to follow whatever the privacy of the other blockchain you are using or the app that you are using. It's just outside.
Do both parties of the transaction have to agree that the bridge to a
Both parties, I'm confident the answer is yes, because if you're going to be moving off chain, if I'm going to be taking my I think USDCX is a good example. So if I'm going to be taking my USDCX back off of Canton, then I'm going to probably be taking it to Ethereum and I'm going to take USDC. Then I would need to move the funds. It would have to go through Circle's X reserve, and then it would move off. So I need to agree to the transaction, and then both sides of the bridge need to accept the transaction. Any other questions? Okay. Well, thank you guys.